What if I told you there's an entire community in America that doesn't pay Social Security or Medicare taxes legally? Sounds unbelievable, right? A lot of people assume the Amish don't pay taxes at all, but the reality is a bit more complicated. The Amish have built a lifestyle that keeps them separate from modern society. They don't use electricity the way we do, they avoid modern technology, and they rely on their own communities instead of government programs. And because of that, they've found legal ways to avoid certain taxes without breaking any laws. But how does it actually work? What taxes do they skip and which ones do they still have to pay? Let's break it down. The Amish live by a simple rule: if they don't rely on government programs, they shouldn't have to pay for them, and that's exactly why they're exempt from certain taxes. One of the biggest exemptions they receive is from Social Security and Medicare taxes. Unlike most Americans, the Amish don't pay into these systems because they don't use them. Instead of government-funded retirement or health care, they take care of their own medical expenses, elderly care, and financial support all come from within their community. This exemption applies to Amish individuals who are self-employed or work for other Amish businesses. But what about Amish-run businesses? That's where it gets interesting. If an Amish person owns a business and hires other Amish employees, they aren't required to withhold Social Security and Medicare taxes from their workers' paychecks. However, if they hire non-Amish employees, those employees must still pay these taxes like anyone else. These exemptions are all legally recognized under U.S. tax laws, specifically through religious exemption clauses. Amish individuals file special paperwork with the IRS to opt out, and as long as they never claim Social Security or Medicare benefits, they remain exempt. In short, the Amish have structured their communities in a way that allows them to legally bypass certain taxes, but that doesn't mean they don't pay any taxes at all. Just because the Amish avoid certain taxes doesn't mean they live completely tax-free. In fact, they still contribute to several major taxes just like everyone else. First up is property tax. The Amish own large amounts of land, from farms to homes to small businesses. And just like any other property owner in the U.S., they're required to pay property taxes to the state and local government. This applies even though they don't use many public services like schools or emergency responders. Then there's income tax. While Amish individuals working within their own community often avoid Social Security and Medicare taxes, they still have to pay federal and state income tax. And if an Amish person takes a job outside the community, say in construction or manufacturing for a non-Amish employer, they pay full income taxes just like any other American worker. Sales tax is another area where the Amish contribute. When they make purchases from stores outside their community, they pay sales tax just like everyone else. This applies to things like farm equipment, tools, and supplies they can't produce themselves. Lastly, there are business taxes. If an Amish-owned business interacts with the public such as selling furniture or produce to non-Amish customers, it must follow standard tax regulations. This includes sales tax collection and any business-related income taxes. So while the Amish have found legal ways to avoid certain taxes, they're still very much part of the tax system. The real secret lies in how they structure their economy to minimize tax burdens, how they legally avoid extra taxes. The Amish have built a unique business model that allows them to legally minimize taxes while staying completely within the bounds of U.S. law. Their approach revolves around cash transactions, family-run businesses, and limited interaction with financial institutions. These methods help them avoid certain tax obligations without breaking any laws. Cash-based economy. One of the biggest ways Amish businesses reduce their tax burden is by operating primarily on a cash basis. Unlike conventional businesses that rely on credit cards, digital payments, and banking systems, Amish businesses conduct most of their transactions in cash. This reduces the need for detailed financial records, lowering the taxable income that must be reported. Cash transactions mean fewer paper trails, which can reduce business income visibility for taxation. However, this doesn't mean the Amish evade taxes. It simply means that fewer transactions require formal tax reporting. Since their businesses are small and community-focused, they operate outside the typical corporate tax structure. Additionally, by avoiding credit cards and bank loans, they do not pay interest on borrowed money, which would otherwise be taxable. This financial independence helps them keep expenses low while legally minimizing taxable obligations. Family-run businesses. Another key tax advantage of Amish businesses is that they are almost always family-run. Whether they operate furniture shops, farms, or construction businesses, they usually employ only family members. In the U.S., businesses that employ only family members can avoid many payroll taxes, including Social Security and Medicare taxes. Since the Amish have religious exemptions from Social Security, they do not contribute to or benefit from it. As a result, their businesses do not need to withhold payroll taxes for Amish workers, significantly reducing their tax burden. Additionally, many Amish businesses operate as sole proprietorships or partnerships rather than corporations. These business structures help them avoid corporate income taxes and the administrative costs of maintaining complex tax records. Avoiding taxable accounts. Unlike most businesses that maintain bank accounts, process electronic payments, and invest in financial markets, Amish businesses deliberately limit their interactions with financial institutions. By avoiding traditional banking systems, they reduce their exposure to taxable transactions, including capital gains and interest income. Since they do not take out loans, they also avoid interest payments that would be subject to taxation. Without checking or savings accounts that earn interest, they don't have to report investment income to the IRS. The Amish business model is structured in a way that naturally minimizes tax obligations while remaining legally compliant. By using cash transactions, keeping businesses within the family, and avoiding financial institutions, they reduce taxable income and simplify their financial operations. What happens if an Amish person leaves the community? Leaving the Amish community is not just a cultural or lifestyle change, it also comes with significant financial and tax implications. Once an individual decides to leave, they are no longer covered under the Amish tax exemptions and must integrate fully into the U.S. tax system. This transition brings new obligations, including Social Security and Medicare taxes, changes in income tax responsibilities, and new business tax liabilities. Social Security and Medicare taxes. One of the biggest financial shifts for former Amish individuals is their obligation to pay Social Security and Medicare taxes. While Amish individuals who remain in the community are exempt due to religious reasons, this exemption no longer applies once they leave. If a former Amish person takes a job in the mainstream workforce, their employer will automatically withhold Social Security and Medicare taxes from their paycheck. If they become self-employed, they must pay self-employment tax, which includes contributions to Social Security and Medicare. Unlike their time in the Amish community, where elder care and medical expenses were handled through communal support, former Amish must now participate in government programs like Social Security and Medicare for retirement and health care. Income tax responsibilities. When an Amish person leaves their community and enters the mainstream workforce, they become fully subject to federal, state, and local income taxes. This means wage earners, if they take a regular job, they will have income taxes automatically deducted from their paycheck, just like any other employee. Self-employed individuals. If they start a business, they will have to report all income and pay estimated taxes quarterly. Filing requirements. Unlike in the Amish community, where financial transactions are often informal, ex-Amish must now file yearly tax returns with the IRS and their state tax agency. Many former Amish individuals may struggle with understanding these tax obligations, as they previously lived in a system with minimal tax exposure. Some even seek financial advisors or tax professionals to navigate the complex tax rules they now have to follow. Business tax responsibilities. If a former Amish person starts their own non-Amish business, they will no longer benefit from the tax advantages of Amish-run businesses. This means they must register their business with the government, which may require obtaining an employer identification number, EIN, and other legal paperwork. They must pay corporate or self-employment taxes, depending on their business structure. If they hire employees, they must withhold payroll taxes for Social Security, Medicare, and unemployment insurance. Leaving the Amish community means entering a tax system that they were previously exempt from. They now have to pay into Social Security and Medicare, file income tax returns, and comply with business tax laws if they start a company. While this can be an overwhelming adjustment, it is an essential part of becoming financially independent outside the Amish way of life. Controversies and legal loopholes in Amish tax exemptions. The Amish community's tax exemptions have sparked debates over fairness, legal loopholes, and government policies. While the Amish argue that they follow their religious principles and avoid government aid, critics question whether these exemptions create an unfair advantage. Some cases have even involved Amish businesses facing tax scrutiny, further fueling the controversy. One of the biggest controversies revolves around Social Security and Medicare exemptions. The Amish neither contribute to these programs nor benefit from them, as their communities handle healthcare and retirement needs internally. However, this raises the question: is it fair for the Amish to be exempt when other citizens must contribute? Should religious beliefs allow individuals to opt out of public programs? Some argue that since the Amish do not take government benefits, they should not have to pay into these systems. Others, however, believe that allowing religious exemptions sets a precedent for others to demand similar treatment, which could weaken government programs like Social Security. There have been legal challenges over the years, but the U.S. government has maintained that as long as the Amish do not collect benefits, they are not required to contribute. 2. Amish businesses and tax scrutiny. While individual Amish workers are exempt from Social Security taxes, Amish businesses that hire non-Amish employees must comply with standard tax laws. Some Amish business owners have faced scrutiny for misclassifying workers or attempting to extend their exemptions beyond what the law allows. For example, some Amish employers have been accused of not properly withholding payroll taxes for non-Amish workers. There have been cases where Amish businesses were audited for underreporting income due to their cash-based economy. Some Amish have argued that their businesses should also be exempt from certain regulations, leading to legal disputes. These cases highlight the tension between religious freedom and federal tax laws, especially when Amish-run businesses interact with the broader economy. 3. Are the Amish exploiting the system? Critics argue that certain Amish practices could be seen as legal loopholes that allow them to avoid taxes unfairly. Some of these include cash transactions. Many Amish businesses operate on a cash-only basis, making it harder for tax authorities to track income and enforce tax collection. Religious exemptions beyond Social Security. In some cases, Amish businesses have sought additional exemptions beyond Social Security, arguing that their way of life should exempt them from various workplace laws. Minimal banking and financial reporting. By avoiding banks and credit institutions, the Amish reduce their financial paper trail, making it challenging for tax agencies to ensure full compliance. While the Amish insist that these practices align with their religious values rather than an attempt to exploit the system, critics believe such exemptions give Amish businesses an advantage over non-Amish competitors who must follow all tax laws. The Amish tax exemption remains a highly debated issue. Supporters argue that the Amish live separately and do not burden government systems, while critics believe their exemptions create unfair advantages and potential loopholes. While legal battles have been minimal, ongoing scrutiny of Amish businesses suggests that this debate is far from over. The Amish have crafted a unique way of living that allows them to legally minimize taxes while staying true to their beliefs. They are exempt from Social Security and Medicare taxes, yet they still pay property, income, and sales taxes like other citizens. Their cash-based economy, family-run businesses, and limited banking interactions further reduce their tax burdens. But is this system fair? Supporters argue that since the Amish refuse government benefits, their exemptions make sense. Critics, however, believe these loopholes give Amish businesses an unfair advantage over others who must pay full taxes. So, what do you think? Should religious beliefs allow communities to opt out of certain taxes, or should tax laws be the same for everyone? Let us know in the comments below. And if you found this video insightful, don't forget to like, share, and subscribe for more deep dives into fascinating topics.